the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares were down today as investors continue to mount developments out of the US. So if you look at the STI, it was down 0.32% at 4,242 points at about 2:38 p.m. Singapore time, and that is with a value turnover of some 832 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the red as well, down 0.3% at 4,243 points. And in terms of value turnover, that's 1.97 billion Sing dollars. Gainers trailed losers 243 versus 299. Top advances for today, we've got for you Spindex Industries, GMX USD and Hong Leong Asia. And top decliners, we've got for you New Incorporation USD, SGX and DBS. Now in terms of counters to watch, we have Thomson Medical Group because the healthcare provider yesterday announced its Johor Bay mega project in Malaysia, and that is with a projected gross development value of over 18 billion Malaysian ringgit. We're looking at around 5.5 billion Sing dollars. Now meanwhile, from headlines relating to the US, continuing to dominate the mind space of investors and the possibility of additional tariffs on US trading partners, we've got more international headlines in focus. Joining us on the line today is Kelvin Wong, Senior Analyst at OANDA. Let's welcome him to the show. Kelvin, thanks for joining us.
Hey, hi. Thank you for the invitation again, Tian Tian. Good to be on the show.
Great to have you on. And Kelvin, let's talk about global markets this time around. Sure. Earlier, we talked about how headlines relating to the US continue to dominate the mind space of investors. In particular, we are actually looking at the announcement by US President Donald Trump that he is firing Federal Reserve Governor Lisa Cook, citing allegations of false statements on her mortgage agreements. Two parts to my question. One is, can Trump actually do so? And the second part is, how have both equity and currency investors reacted to the news?
Yeah, sure. Maybe let's answer the first part over here about the technicality regarding about the legal constitution about firing U.S. Federal Reserve Governor. If you look at the constitution, they say that there's a possibility for a U.S. president to actually fire a Federal Reserve Governor by cause. That is, the onus right now is on the U.S. White House administration to provide evidence to the U.S. highest court, let's say the Supreme Court, to state that U.S. Federal Reserve Governor Cook, she's in this alleged mortgage, we call it privatization of her accounts, of her mortgage, we call it properties or borrowings. But however, this is the first time in U.S. history for a U.S. president to actually tingle with the mechanics of the U.S. Federal Reserve. So it's a very unprecedented case over here, where markets will be actually watching very closely the latest developments, because right now, based on my understanding so far, is that Federal Reserve Governor Cook, she's actually defending her stance, stating that whatever Trump is doing right now is kind of illegal, and potentially there could be a challenge in the legal courts, and how that play out is totally unprecedented. And that's going to be a very, very key radar on the screen of FX traders and as well as fixed income traders on the U.S. Treasury markets.
Now, in terms of equity movements and also currency movements, how have investors reacted? Do you think they reacted in line with your expectations?
Yes. So in terms of the very short-term movement, what we could see over here is a very choppy sideways intraday move, especially on the FX market. So the earlier reaction was we see a sell-off in the US dollar, where the US dollar index tumbled close to negative 0.3% at the start of the Asia early trading session. And thereafter, it's kind of trimmed back its losses to trade as almost the unchanged mark. And what we could see over here is that I think we also got to pay very closely to rating agencies, credit rating agencies that rate U.S. sovereign bonds, i.e. the U.S. Treasury market. So there was actually a report up from S&P Global, which is a major rating agency, stating that U.S. credit rating ratings will be on the watch if we start to see the independence of U.S. Federal Reserve, which is considered a key U.S. Financial institution.
Yeah.
The other independence has been threatened by the U.S. White House administration. So that could be a big part that could impact the financial market. So if that were to happen, where U.S. starts to see another downgrade of their U.S. sovereign bond by a major credit ratings agency, that could see further potential downside on the U.S. dollar.
And when we talk about announcements by Trump, we are not just talking about his intentions to fire Lisa Cook, but also how he vowed to impose substantial additional tariffs on shipments from countries that do not cancel digital taxes and regulations. Now, on top of that, Trump also warned of steeper tariffs on China if China restricts exports of rare earths, minerals or magnets, and to that end we are looking at a tariff of 200% on China. So how have investors in Asia taken in the news thus far?
Well, actually, to me, what I see over this is more like a tariff tantrum. So investors have been
used to it.
I would say used to it, because the negative reaction in Asia is not that great. So if you look at the China-related stock market, the impact is not so disastrous at all. So if you look at the CSI 300 index, it's only down by negative 0.4%. So I believe that it's more like a brinkmanship of technique that the U.S. President Trump wants to play. And do not forget, very interestingly, his trade tariffs, so-called threat of that 200% China exports heading to U.S. Comes after when China regulator actually forbid the use of NVIDIA lower-tier semiconductor chips on Chinese corporations. Yeah, so that could be a kind of a brinkmanship play where two countries try to buckle over each other related to this key, we call it key product line, where we know that Chinese is in need of semiconductor chips to actually train their AI model, but US is also in need of rare earth magnets and other parts to actually boost their other, we call it AI demand-driven strategy.
Now, if we go back to the Singapore stock market as usual, Kelvin, very quickly, how did the STI fare today? Any surprises if we look at the biggest movers?
So if you look at the STI, overall it has been consolidating since the fresh all-time high that was made in late July. So if you look at from late July until now, it has been nicely in a very nice consolidating phase. So to me, I view it as more like a bullish consolidation within a longer-term, medium-term uptrend. And if you dive deeper into the segment or the intraday performance of its components, we call it stocks, not all stocks are actually sold off today in line with that drop of the STI, which if you very quickly, the STI ended today at negative 0.3%. So we do have some components that we consider as a higher beta component stocks, stocks that are moving in line with economic growth. Like, for example, Yangzijiang Shipping is up by positive 2% today. They actually outperform much better than the broader STI, which is down by negative 0.3%. So as we dive deep into we dissect into the individual component stocks, not all the gainers are defensive. There are a couple of gainers for today that are considered as higher beta component stocks, which are highly geared towards the economic cyclical factor.
Okay. And zooming in on some of the counters to watch, Kelvin, earlier we talked about Thomson Medical Group, given how it announced its Johor Bay mega project in Malaysia yesterday. We are talking about a projected gross development value of over 18 billion Malaysian ringgit. I know you don't comment on individual counters, but generally speaking, what is the outlook of firms looking into Johor at this point in time, particularly healthcare counters?
I think it's very interesting to look at various hospitality stocks listed in the Singapore Exchange, because I do believe that they're actually taking advantage of this Johor Singapore Special Economic Zone, where they're able to reap the rewards from the Johor side in terms of a diversification of their business model. And also, on top of that, potentially preference tax treatments as well from the Malaysian government. So this is a very interesting, exciting development for Singapore listed hospitality companies to actually take advantage of this Johor Singapore special economic zone. And the next step we've got to monitor over here is that I think this, the very long term, is how will their demand services will be after they have already established a foothold in Johor.
Now, another counter that we want to keep our eyes on, Kelvin, is Fraser's property. I'm not sure if you've been to the Yishun 10 Mall beside North Point City, the one where the movie theatre is located in.
Not really, because I'm more located on the western side of Singapore. But I know that clearly that the Singapore government right now is trying to rejuvenate the northern part of Singapore. So that explains why the move from Fraser. Yeah.
Okay. Now, just to bring up some information regarding Fraser's before we get ahead of ourselves. Fraser's property said yesterday that it is buying 10 strata lots in Yishun 10 Mall, which is the mall beside North Point City, where you have the Arnold's Chicken and the movie theatre. And that is for 34.5 million Sing dollars. Now, the seller is Fraser's Centrepoint Trust. And upon completion, Fraser's property will fully own Yishun 10, as it has already bought the cinema complex in the building from Golden Village Multiplex for 48 million Sing dollars. So broadly speaking, not specific to Fraser's, are developers and REITs moving their assets around, and if yes, why so?
I think from me to understand from the standpoint from different stakeholders, one from the developer, one from the REITs manager. So for the developers, kind of, let's say, to actually sell off some of their assets to actually REITs manager is more likely due to capital recycling. Such as selling off of stabilized building, often to their sponsored REITs. So this potentially to free up cash flow for new project or to monetize their so-called unlisted fixed assets, which are buildings. And from a REIT's point of view, it could be potentially due to reallocation of their portfolio. So especially we know that REITs has been in the last 1 year or two has been facing this distribution per unit growth pressure. So some of them has their DPU growth rate inching down lower over the last 2 or 3 years. So this could also potentially be a kind of a spice up of their DPU growth with new assets pumping into the overall portfolio, and potentially, especially we potentially will start to see data center is one of them, and talk about Fraser with more the suburban retail, and very interestingly, this suburban asset classes or retail asset classes coincide with our current Singapore government plan of kind of regionalizing the northern part of Singapore.
Now, if you're just tuning in, we're in conversation with Kelvin Wong, Senior Analyst at OANDA. And across the region, Kelvin, a U.S. government spokesperson, has confirmed that senior Chinese trade negotiator Li Chenkang is expected to travel to Washington this week to meet with U.S. officials. How optimistic are you about an extension of U.S.-China trade truce, and how far have investors priced this in, though?
I believe that most investors are now looking for other positives that may come out of this meeting by this senior trade Chinese officials heading to U.S. this week. Because do not forget, he's part of the team together with He Lingfeng that managed to actually struck a trade truce with the U.S. counterparts in May this year. And that actually led to the further extension of this trade truce till November this year. So perhaps most participants, traders were looking out for, would there be any potential lead up to actually a face-on one-to-one meeting, physical meeting between U.S. President Trump and as well as China President Xi Jinping. And if that were to actually happen, perhaps this meeting is actually able to lay out the groundwork to actually try to solve any unresolved situation or unresolved trade issues between these two countries, where finally we managed to see a middle ground where both sides decide to actually give and take between one another. So traders will be looking out for, firstly, would there be a potential lead or a prelude to a meeting between both leaders. So this meeting between this senior Chinese trade negotiator heading to U.S. This week could be a potential preparation work for that.
And further away, before we let you go, Kelvin, let's talk about AI. Perplexity AI said it'll begin paying out millions of dollars to media outlets as part of a new model for sharing search revenue with publishers. Now, how far will a revenue sharing model by Perplexity be a peace offering to publishers? And does this give us a taste of what the relationship between primary information collectors and AI companies will look like in the future?
Yes, indeed. So I think this could set a precedent for AI-related companies, especially Perplexity, that is more like an AI search engine like Google. So they actually use a vast array of data from media outlets like Wall Street Journal. We talk about the UK. Both of such international media outlets has claimed that Perplexity infringe copyrights using their data for training. And also the negative part is that they start spilling out data that is not intended to be. That means, i.e., it's not kind of a 100% kind of copy and paste from the original content from such publisher. So with such profit sharing between the publisher, which is the newspaper, and Perplexity, that could iron off some of this issue. But the next key step over here is this new feature is not free for Perplexity user. It's a paid feature. They call it Comet Plus. So we've got to see the demand from such new feature by Perplexity on its end user. So would there be a high demand for such paid feature? So if there were to be such high demand, potentially this could set a precedent for other AI, we call it related startup, working on a very similar model like Perplexity to do this kind of profit sharing with their so-called data provider, which the data feed that they use for their training algorithm.
I see, lots to watch indeed. Thanks so much for the insights today, Kelvin. That was Kelvin Wong, Senior Analyst at OANDA. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.